This webinar is presented to you by myself, Anusha Singh, and In2IT Technologies. For more information, please visit our In2IT Technologies website at www.in2ittech.com. Our webinar today is basically on a brief overview of financial fraud and compliance. Our agenda, a brief overview or introduction, global statistics, we look at threats, current market trends, solutions from In2IT, and Q&A. A brief introduction. All organizations are basically subject to fraud risks. Whether the threats take place internally or external, the consequences of fraud activities can lead to the downfall of many companies. More and more financial institutions are leveraging of technology to ensure that clients' expectations are met. Clients now have the ability to conduct numerous transactions from the convenience of their homes, on computers, and mobile devices. While financial institutions are opening multiple channels for this convenience, fraudsters are always on the prowl to detect loopholes to commit fraud. In order to mitigate fraud losses, financial institutions need to take preventative measures in order to protect themselves and their clients. In order to do so, there is more effort in ensuring that data is protected and real-time fraud monitoring takes place in order to ensure that losses are curbed and compliance rules and regulations are adhered to. This next slide reflects information from the KPMG banking survey, which was conducted between November 2018 and February 2019 over 43 retail banks. Key findings of this report show that half of the survey respondents stated that external fraud volume and value has increased, and only less than 25% of these losses have been recovered. All regions have confirmed that the most significant challenge is cyber attacks. Fraudsters obtain customer data through hacking, social engineering attempts on the dark web, and through criminal networks. Not only does fraud losses impact on the bottom line, but also all elements of a business. This slide reflects the 2018 PwC survey on economic crime and fraud. This survey in 2018 asked respondents what level of crime affected the business operations. It reflected that employee morale at 48%, business relations 38%, reputation or brand strength 36%, relation with regulators 30%, and share price 16%. In today's environment, companies of all sizes need to consider the risk of fraud and take proactive measures to mitigate these risks they face. Fraud is not a random occurrence. It happens in situations in which conditions are right for it to happen. Identifying the root causes and removing the potential for fraud is of the utmost importance. A brief overview of some threats: money laundering, scams, the use of spyware to steal information, phishing, cyber or online fraud, application fraud, and identity theft. Money laundering relating to money mules in schools. This type of trend is where teenagers are providing accounts to syndicates, which are used to launder funds. Also, elderly people are being paid to open accounts, in which is used for laundering. Scams. A common scenario entails fraudsters responding to an advert of goods They try to convince you that the cash payment or electronic transfer payment has been made, when in fact they have deposited a fraudulent check into your account. If you rely solely on the proof of the payment and release the goods, the check is returned and you end up with a debit on your account and no goods. A refund scam? Refund scams normally happen when fraudsters use altered or fraudulent receipts, deposit slips, or internet payment confirmations to trick you into believing that the payment has been made into your account. A common scenario entails fraudsters contacting you and claiming that they have made an incorrect payment on your account or an accidental overpayment. Phishing? Phishing is basically a scam that happens when you receive a valid-looking email, which appears to come from a bank or another financial institution, asking you to click on a link and to update or verify information. Also, identity theft. A lot of fraud stems indirectly from identity theft, and many victims only realize that their identities have been misused when they apply for credit, only to find that they have been blacklisted. Some current market trends: beneficial ownership. The lack of adequate, accurate, and timely beneficial ownership information facilitates money laundering and terrorist financing. The personal information of shareholders and ultimate beneficiaries must be collected and disclosed, such as your identity number, the contact information, passports, the type of shares, and the number of shares. The establishment of beneficial ownership is important, as financial institutions must understand the customer profile to properly assess for money laundering or terror financing risks associated with the business relationship. Transaction monitoring and the adoption of analytics. The requirement to monitor transactions is not new. Ever since the first AML directive was introduced in 1991, financial institutions have been given the responsibility of reporting suspicious transactions. Financial institutions need to monitor the customer's accounts, activities, and transactions, which are very important. This is when the adoption of analytics assists in reducing false positives and providing information which will help in the investigation process. Some methods to manage risk: monitoring and reporting, detection tools, risk evaluation, innovation, systems, policies, procedures. If all these methods are looked at, risk can be detected and danger averted. Currently, organizations have access to a wealth of innovative and sophisticated technologies with which to defend themselves against fraud, aimed at monitoring, analyzing, learning, and predicting human behavior. These include machine learning, predictive analytics, and other artificial intelligence techniques. The PwC survey of 2018 showed that companies are using these technologies in different degrees depending on the industry sector. Many financial institutions use outdated technology to run their AML programs. This technology leads to high volume of false positives, which have adverse effects. The automated AML solution will ensure reduced false positives and early fraud detection. Detection of suspicious behavior more rapidly is the key, and therefore smart technology must be explored. Financial institutions must embrace technology and reduce false positives along with understanding customer behavior. Financial institutions normally grapple with the concept of combining fraud and AML business units. Should they? Yes, no, maybe. Well, AML was considered a regulatory-driven cost center. Fraud and AML often did not communicate, work, or share case management or monitoring systems, but rather they competed against each other for budget and resources. Typically, the fraud investigators in each business unit did not know that the person was also being investigated for money laundering or vice versa. In recent years, there has been a healthy trend towards combining these two functions. Merging both these business units will ensure that losses will be reviewed holistically and not in silos. A key one is that much of the data required to detect money laundering is the same as needed to prevent fraud. For example, similar product types, such as international wire transfers, which are typically considered as high risk and monitored more closely. Also, delivery channels such as online and remote access are high risk for both money laundering and fraud. AML and fraud leverage of the same transactional parameters, account and customer information, peer group definitions, watch lists, and certain scenarios and detection models. From both business and compliance perspectives, there is a great value in a united database that provides a holistic view of the customer's total relationship with the bank. There are potential cost savings through more efficient use of resources, including systems, data management, and the elimination of duplicate alert reviews and case investigations. Some solutions from In2IT Technologies. In2IT acknowledges the need and the urgency of our customers to implement fraud and compliance solutions to address all business and regulatory requirements. We believe that technology can aid in the convergence of fraud and AML and make compliance resilient, responsive, and sustainable. For example, digital solutions such as robotic process automation, RPA, machine learning, and artificial intelligence can assist in data conditioning and consolidation. The fraud and AML suite that In2IT offers enable customers to achieve strategic objectives and mitigate fraud losses. The AML and CDD, which is customer due diligence, use multiple detection methods and faster processing, which will allow for the identification of risks across all products and customer profiles. The anti-money laundering solution includes components of data management, detection and alert generation, alert management, case management, along with category-specific workflow, content management, and advanced analytics, including social network analysis. An IP package will be delivered as a proposed solution, which will focus on transaction monitoring and will contain data models, rules, scenarios, and techniques that are specific for the area of compliance. The system is built upon proven technologies of data management, analytics, and reporting. The fraud solution provides an early warning of emerging threats and aids in mitigating fraud losses. The end-to-end framework provides for better fraud detection and greater operational efficiency across all multiple channels and products. In2IT customers will detect more fraud and automatically reduce fraud losses. The fraud solution uses multiple techniques like automated business rules, predictive modeling, text mining, data searches, exception reports, network analysis, etc., to identify suspicious activity with greater accuracy. The solution provides a view of cross-brand or product fraud by viewing customer accounts and transactions for all lines of business in one consolidated view. In2IT customers will enjoy the benefits of improving customer feedback and improving investigators' efficiency, reducing false positives, and to gain a competitive advantage.